What if two people, just two, tried to buy an entire element off the periodic table? Not shares in a company, not real estate, an element, the kind of thing you find in the Earth's crust. In 1980, Nelson Bunker Hunt and William Herbert Hunt, two Texas billionaires with more money than sense and more sense than you'd think, attempted to corner the global silver market. They didn't just buy silver, they tried to become silver. Every ounce, every bar, every futures contract they could get their hands on. And for a while, it worked. Silver went from $6 an ounce to $50. The Hunt brothers looked like the smartest men alive. They were not the smartest men alive. Because here's the thing about trying to own an entire market. The people who run that market get to change the rules whenever they want. And they did. And then everything came apart. This is the story of the biggest commodity play in history, the day the rules got rewritten mid-game, and why you can be right about the future and still lose every cent you have. Let's go back to the beginning. The 1970s were a financial nightmare. And I don't mean a bad quarter, stocks are down kind of nightmare. I mean the kind where the entire monetary system that had governed the world since World War II just stopped working. In 1971, Richard Nixon took the United States off the gold standard. The dollar was no longer backed by anything except the full faith and credit of the United States government. Which, if you've been paying attention to this channel, you know is a phrase that should come with a warning label.
Inflation exploded. By the late 1970s, consumer prices were rising at 13% a year. Your savings account was a slow-motion bonfire. Every dollar you held was worth less tomorrow than it was today. And the people in charge, they kept printing more. Now, most people just sort of accepted this, complained about gas prices, grumbled at the grocery store, normal stuff. But Nelson Bunker Hunt was not most people. Nelson was the son of H.L. Hunt, once considered the richest man in America. Oil money, Texas money, the kind of money where you don't check prices, you set them. Nelson looked at what was happening to the dollar and came to a conclusion that was, honestly, pretty reasonable. Paper money is being destroyed. Hard assets, things you can hold, things that are real, those are the only safe bet. Gold was the obvious choice, but gold had a problem. The U.S. government had only recently made it legal for citizens to own gold again, and the market was tightly watched. Silver, though, silver was less regulated, less monitored, and here's the part that made Nelson's eyes light up, much smaller as a market. The entire above-ground supply of silver in the world could be bought for a fraction of what gold would cost. A few $billion strategically deployed could move the entire market. And that's exactly what Nelson and his brother Herbert decided to do. But here's where it gets interesting.
They didn't just buy some silver. Starting in 1973, the Hunt brothers began accumulating silver on a scale that nobody had ever attempted. Physical silver, futures contracts. They even convinced wealthy Saudi royals to join them. At one point, the Hunts and their associates controlled an estimated 100 to 200 million ounces of silver. To put that in perspective, that was roughly a third of the entire world's privately held supply. A third of all of it. Two guys from Texas. They were taking delivery too. Not just trading paper, they wanted the actual metal. Armored trucks were hauling silver bars to warehouses, planes were flying bullion to vaults in Switzerland. This wasn't speculation, this was hoarding on a civilizational scale. And the price started to move. In early 1979, silver was around $6 an ounce. By September, it hit $16. By December, $34. And then in January 1980, it touched $50 an ounce. That's more than an 8-fold increase in barely a year. The Hunt brothers' silver holdings were worth somewhere north of $4.5 billion in 1980 money. Adjusted for inflation, that's like $16 billion today. They looked like absolute geniuses, visionaries who saw the collapse of paper money coming and positioned themselves perfectly. Remember that feeling. Hold on to it. You're gonna need the contrast. Because here's what the Hunts were also doing, and this is the part that turned a bold trade into a catastrophe. They were borrowing massively.
To buy more silver, they were taking out enormous loans, using their existing silver as collateral. Debt to buy more hard assets to protect against the destruction of the currency.
Let me say that again. Their thesis was that debt-fueled money printing was destroying the dollar. Their strategy to fight this? Take on massive debt to buy more silver. The solution to too much debt was more debt, obviously. And as long as silver kept going up, the math worked beautifully. The collateral kept growing, the banks kept lending. Everyone was happy. But here's the thing about leveraged bets. They work until they don't. And when they don't just fail. They detonate. Now, you might think the danger here was that the Hunts were wrong about inflation. They weren't. Inflation was very real. The dollar was losing value. Their fundamental thesis was correct. The danger was something they never accounted for. The people who control the game didn't like what the Hunts were doing, and those people had the power to change the rules. By late 1979, the price of silver was rising so fast that it was causing real problems. Industrial users, the companies that need silver for electronics, photography, medical equipment, they were getting crushed. Tiffany's took out a full-page ad in the New York Times, basically screaming about how the Hunts were ruining the silver market. Jewelers couldn't afford their own inventory, the commodity exchanges were getting nervous. And then the referees stepped in. On January 7, 1980, the COMEX, the commodity exchange in New York where most silver futures were traded, did something extraordinary. They changed the rules in the middle of the game, while the game was still being played. COMEX imposed Silver Rule 7. They literally named it. This rule restricted trading to liquidation only. That meant you could sell silver contracts, but you could not buy new ones. Think about that for a second. An exchange whose entire purpose is to facilitate buying and selling just banned half of the equation. You could only sell. Wait, it gets worse. They also dramatically raised margin requirements. The Hunts now needed to put up vastly more cash to maintain their existing positions they'd built under completely different rules that existed when they made the trades, rules that were now different. Imagine playing poker, and you're winning, and the house suddenly says, "New rule, you need to put up 10 times more chips just to stay in the hand. Oh, and you can't raise anymore. You can only fold." That's what happened. Now, to be fair, even if the exchange hadn't acted, the leverage alone would have eventually killed them. You can't borrow your way to safety. The rule change just made it faster. Instead of a slow bleed, it was a guillotine. The effect was immediate and devastating. With buying banned and margins skyrocketing, silver started to fall, and fall, and fall. January 17, 1980, $50 an ounce. March 27, 1980, $10.80. That day, March 27th, became known as Silver Thursday. The Hunt brothers couldn't meet their margin calls. Their brokers started liquidating their positions. The price was in free fall, and every tick down made it worse because it triggered more forced selling. In a single day, the silver market lost a third of its value. Bam! Billions. Gone. The Hunts owed over $1.7 billion to their brokers and banks. Money they did not have, because the collateral, the silver itself, was now worth a fraction of what it had been. Nelson Bunker Hunt went before Congress later and delivered one of the most perfectly tone-deaf lines in financial history. When asked about his losses, he said, "$1 billion isn't what it used to be." I mean, he wasn't wrong, but read the room, Nelson. Now here's the part of this story that should make your blood boil a little. The Hunts were broke, wiped out. They eventually declared bankruptcy and were fined. Nelson was found guilty of conspiring to manipulate the silver market and ordered to pay over $10 million. They spent years in court. They lost the family fortune. The consequences were real. But the banks, oh, the banks.
See, the Hunts didn't just owe money to their brokers. They owed massive sums to some of the biggest banks in America. And when it became clear the Hunts couldn't pay, those banks were suddenly in trouble too. A consortium of major banks had over $1 billion in exposure to the Hunt brothers' silver positions. So what happened? The Federal Reserve quietly arranged a bailout. A private loan package of $1.1 billion was put together to prevent the Hunts' collapse from taking down the banking system with it. The very system the Hunts had been betting against had to be rescued because of the Hunts' failure. The Hunts went bankrupt. The banks got saved. Sound familiar?
Nobody called it a bailout, of course. They called it a credit facility and a stabilization effort, because if you use enough syllables, you can make anything sound responsible. And here's the irony that makes this whole story perfect. So perfect, it almost feels scripted. The Hunts' entire thesis was that the government and the financial system were rigged against ordinary people, that the monetary system was designed to benefit insiders, that the rules would always protect the establishment. And they were right. They just didn't realize they weren't part of the establishment. They thought being billionaires made them untouchable. It did not. You can be the richest person in the room. You can own 1/3 of the world's silver. You can be right about inflation, right about the dollar, right about everything. And it doesn't matter, because you cannot beat the people who write the rule book. They will change it. They did change it. And they'll do it again. The Hunts used debt to fight a system built on debt. They tried to corner a market that was never going to let itself be cornered. The moment they got too big, too powerful, too threatening to the existing order, the order simply rewrote the rules. Let me leave you with this. Silver was $6 in 1979. It hit $50 in January 1980. It crashed to under $11 by March. Today, as of recent trading, silver sits around $30 an ounce. It has never returned to its 1980 high, not once, in over 40 years.
The Hunts were right that inflation would erode the dollar. $1 in 1980 buys about 27 cents worth of stuff today. They were right about the fundamental problem, but they went broke, spectacularly, publicly, historically broke, proving it. And if you think this is ancient history, in 2022, the crypto market lost over $2 trillion. Most of that money was lost by people who were technically right about blockchain, but leveraged to the point where being right didn't matter. Luna collapsed overnight. FTX turned out to be a house of cards held together by confidence and fraud. Sound familiar? Because being right and making money are two completely different things, and the distance between them is usually measured in leverage and hubris. The rules changed, the game continued. And as usual on Money Never Learns, nobody learned anything. Most people watching this think they'd never fall for this, that they'd see the trap, that they wouldn't bet everything on being right. Most of the people who lost money in 2008 thought the same thing. So did the ones holding Luna in 2022. So did the ones who trusted FTX with their savings. So did the depositors at Silicon Valley Bank in 2023, who thought a bank couldn't just vanish. History doesn't repeat, but the playbook never changes. If you'd rather see the next one coming, subscribe button's right there, or don't. The Hunts were confident too.